Welcome to today's session and thanks for joining. Let me start by saying that I could not post the video during the weekend or make a live session during the weekend, so I am conducting it today. I carried out the analysis during the weekend, but I am able to do it now only. Apology for that, but still, I think you will find it useful as usual. In these videos, I show how you can swing trade profitably in any market condition, including the previous week, and I'll show that using live examples, be it with lots of uncertainties or in usual up, down, or sideways markets. By taking only high probability and low risk trades that have maximum forces from the market, sector, industry, fundamental, technical, and even seasonality in their favor. I will revisit some trade ideas or market analysis I shared recently and review how that played out. If you stay with me and if the market condition is appropriate, I will show some stocks getting ready to buy or short. I will not try that if the market is not conducive to either buying or shorting. How to trade profitably with uncertainties. This past week had many uncertainties. The USA election, the biggest of all uncertainties by far, a central bank Fed rate decision, and many stocks earnings. How to trade with such uncertainties? One way, to take intraday trades. Then we don't hold the stock overnight. Another is to take swing trades but use defined risk strategies like options vertical. I mentioned about these two ways in the previous market recap itself, where I discussed about the upcoming uncertainties. Is there anything else to it? Yes. Suppose a stock has multiple uncertainties. Let's say all the three I mentioned: election, central bank rate decision, and its earnings. You see one of them resolved, say earning, and the stock makes a move. Based on the move, you consider that earning was the dominant uncertainty which is now resolved, and you take trade in the stock's direction. I traded a stock like that this week. I'll come back to it later today. This is one of the ways to trade in uncertainties, deciding which one is more dominant based on a stock's move and take a calculated risk. You could also wait for all uncertainties to be over. Usually by then the market would move a lot to make trading risky. That happened this week. By the time the election result and Fed rate decision was known, market was too overbought to make buying risky. And I made another slide, I cannot find it. So let me state that the other way would be to see if uncertainties are so high that option selling is safe enough. I will do that only for a stock I identified previously, and that is stalling at support. In spite of all the uncertainty, stalling at support before earnings, before central bank rate decision, before US election, stalling at earnings. Uncertainties are high, options are very expensive, and it is okay to take a trade with options verticals. taking advantage of the high uncertainties, high options pricing. I traded a stock like that. I'll come back to that also later today. Greetings, I am Sagar Nandi, retired IT professional, swing trading stocks in the USA and India markets using only one trading system that simplifies my life. I developed the systems themselves. Q. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live stock and market analysis on my website superiorprofit.co, X handle Superior Profit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Q runs on Metastock and registration platforms. It has multiple components. I'll use several of them today. Again, I created all these snapshots during the weekend. Let's go through them. Dollar index went up but at resistance in weekly inside a triangle in daily created by trendline resistance and support. If it breaks out, that may put pressure on the market. If it breaks down, it may help the market. Well, let's just I may not do that for every instrument, but let's just look at dollar index as of now. Market is open. Today is Monday. Dollar index is stopping at the trendline resistance. If it stops there and falls down, and then it has to break down below the support, that may help the market. Not always works like that. Is not always 100% correlated with the market in the inverse direction, but worth keeping an eye on that. I looked at dollar index, but I don't intend to do that for every instrument that I will discuss in the market recap. That will take too much time. Let's look at mega cap index. It rallied, and in the previous market recap I pointed to the support in weekly and also the nearby support in daily. And remember my last market recap, that was one reason, this support in weekly, daily and support in multiple market ETFs, that I was reluctant to short. That was my very unambiguous decision in the previous market recap. Reluctant to short, but I was not confident of buying because of the uncertainties. I suggested either day trading or using options verticals and some other ways that I will discuss today that I didn't discuss last time. This week is a good time because now we have live examples on those two additional techniques. In any case, the support held, mega cap index rallied, it is now overbought and bullish, not a time I like to buy. Let's look at market breadth, invaluable in assessing the internal health of the market and anticipating a change in market direction. Market rallied, and in fact the rally started before the election results were known. It started one day earlier, and interestingly the accumulation count of any significance too came on the day before the election results were known. After that market rallied, but there was no accumulation whatsoever. Doesn't look like a very strong bullish market. Having said that, looking back also, we don't have many accumulation days, neither did we have any distribution day. So it is not bearish at all, but the bulls don't have so much strength as to create new accumulation counts in the last few days of the last week. And we continue to have a concern of market being overbought from the cluster of new high, new low alerts. When a cluster of them comes, market tends to pause or calm down little bit, and I see a cluster of these alerts. So that's a cause for concern. Doesn't tell me to short, tells me to be cautious about buying. And if I look at composite breadth, I'll just look at the points I highlighted. For NYSE also, I see that cautionary alert from new high, new low percentage, cluster of the alert telling to be cautious about buying, does not tell me to short. And if I look at the major indexes, I have the same cautionary alert now from 4 of the 5 major indexes: Dow Jones Industrials, Nasdaq 100, S&P 500, S&P 1500. Doesn't tell me to short, tells me to be cautious about buying. What is the market external view? Market went up across the board. IWM was the strongest, up by 8.7% last week. SPY, the weakest one of them, was also up by 4.7%. Very strong show. All of them went up from the support. My decision not to short at the support was the right decision. As of the weekend, let's look at the market with ETFs. The support that was a reason for me not to short last week was useful. It held and it created a bullish indecision cluster followed by a bull release. Then it rallied. Now it is above upper boundary, overbought. Stretch is also showing overbought. Clearly bullish but overbought. Not able to buy. In such an overbought condition, there is no signal to short. And this pattern will play out in the other market ETFs also. QQQ, the support I mentioned last week held. Now above upper boundary, stretch showing overbought, very bullish clearly, but overbought. Cannot buy, cannot short. DIA, same thing, support held above upper boundary, stretch showing overbought, but bullish, cannot buy, cannot short. IWM, similar thing. Support held like a broken record. Above upper boundary, stretch showing overbought, but bullish, cannot buy, cannot short. Bucket analysis and sector industry stock breadth using QH helps to decide preferred trading direction that may be different from the current market trend. Bucket analysis shows extreme overbought situation. This is as of Friday's close, but it showed the extreme overbought condition for 3 days in a row. That is too late to continue to buy, in my opinion. I don't do that. I don't buy in such an overbought market that has worked well for me in the past. So I have stopped buying, but it has no signal to short. If we look at the sector industry stock breadth, longer term 1 month and 10 days are bullish, 5 days this week, the week that just passed, bullish. It weakened little bit over 2 and 1 day periods, but it is still bullish. It's not so overbought that I can start to get ready for shorting. It's not too green across the board, so it is bullish and no signal for shorting. That's what I can see from here. Technical breadth invaluable in deciding preferred trading direction from breadth charts, and then find unambiguous technical setups for individual stocks. Weekly technical breadth across the board bullish. Cannot short. It's looking little bit overbought, but we get the overbought situation more clearly from daily interval for swing trades. Daily interval last Friday, technical breadth mixed, slightly bearish overall. Clearly overbought because most of the bullish setups are coming from price extreme high. That's an overbought condition. There is some alert from reversals being more bearish than bullish. So that is aligned with attempting to look for stocks that are at very high price level giving reversal setups technically. But the other dimensions, this is technical breadth, the other dimensions are not telling me to short yet. Market level summary then, combining insights from all the market level analysis, the conclusion is to be cautious about buying or to stop buying. I have stopped buying. The next low risk buying opportunity can come only after a pullback. It is not yet a time to short though. One may shortlist some potential candidates, short candidates from technical breadth. We saw there are more reversal setups. I may look for potential short candidates that are reversal setups like headwind, bounce or box, but I'm not ready to short yet because the market level is too bullish, overbought but too bullish. This week's theme, how to trade profitably with uncertainties. Let me explain that with the trade ideas I shared before knowing the results. As usual, I made a profit from both of them. Not unusual if you follow me. Only two stocks I shared last week. One was OKTA, Okta, that I shared in the last market recap, and GT that I shared during the week on Twitter. Both of them went up. Okta went up by 4.8% this week and GT went up by 21.53%. These were both taken during uncertainties, and let me explain exactly how I traded them. Let's go to Okta. In the last recap, we were here. Okta had excellent daily support. It had excellent weekly support. It had a pattern that hardly ever failed me if it is in a strong fundamental stock, and I showed Okta had strong fundamentals. Now this is a stock, an example of trading with uncertainties where none of the uncertainties were resolved when I traded it. How did I trade it? I saw Okta came down initially on Monday, previous week, but it stopped at the multiple trend line supports in daily, stopped at the trend line support in weekly. I checked its option chain and I could find a put option expiring in December after its earnings. Its earnings is in December first week that I showed in the last market recap. So I chose an option expiring after its earnings, December third week, third Friday, and I saw even with a 10% drop from the price, I would break even. And if the uncertainties are resolved, election, central bank, and I was hoping to close the trade before its earnings, the options price would collapse, volatility would collapse, and I could simply book profit in that. In any case, not only that happened, but it moved in my direction. When it came to the yellow direction line, whether you traded short put, I traded actually with short put, or you traded with short put verticals, you would probably have around 30%. I had 30% profit in the December expiry. If you traded with November expiry, profit would be more, but I did not because I saw seasonality was better in December, earnings was in December. I took advantage of that and traded with December expiry, and I closed the entire position when it came to the yellow direction line. After that, I see it is going up today. I don't think about that. I had covered much more than the risk distance in the trade. So I never mind booking profit there. It was a naked put short position for me. So I booked full position profit in the trade. And the other stock that I traded during uncertainties shared before knowing the results was GT. In this case, let me go to the chart template with historical charts. And let me come back to weekly daily. it had an attractive pattern. Let me show on the full screen. It had the very lucrative buy pattern that I mentioned many times. Jump thrust low, price extreme low, came big move up 3. I was tracking it during all this period. Then came another big move up 3, and this move happened after earnings. So it seems like, and that is the hypothesis behind this, logic behind this pattern, that this buying must have been done by some bigger players who knew that something good was happening with the stock, and that culminated in a breakout after earnings. And how I traded it, let me explain. Let me go to the historical template. So I was already tracking the stock, good fundamentals. You could check that out using Cube Vital. After earnings, it rallied and it was breaking all the trend line resistances with very high bullish momentum across the board, across all my Q signals. So I could catch it right around it was breaking the trend line resistances. And I figured with such a powerful move with the pattern, attractive buy pattern, jump thrust low, price extreme low, big move 3 up already having come before and then again showing bullish momentum breakout after earnings, I figured that the uncertainty about earnings was the dominant one. So I bought here, and when price went up, I had, I think, around 10% profit. So again, I did not wait. I closed the full position. This is one example where I decided earnings to be the dominant uncertainty. Once it was resolved in a bullish direction, I traded in the bullish direction, profited from that. And of course, I showed from the market ETFs that if you waited for all the uncertainties to be over, you could see that from Q Edge real-time bucket analysis also, it was already too overbought. So I was not willing to buy under that circumstances. Those are two examples of trades I shared before. Knowing the results, traded with uncertainties and profited from that. I explained how I did that. This week's ideas, I won't share any buying or shorting ideas due to the market outlook I explained earlier. So this is a shorter session. Thanks a lot for joining. I hope to see you in my next session. Look forward to see you in my next session, most likely next weekend. Have a great week. I cannot say great weekend. Have a great week, and as I always say, as this live example show, there is no reason not to do that. Trade profitably. Thank you.